Hi everyone, good evening. It's Wednesday, October 22nd, and this is your post-market update. Welcome back to the US Stock GPS channel. Today, US stocks suffered a broad sell-off across all major indices. Under ongoing macro uncertainty and pressure from upcoming tech earnings, investors chose to cut risk exposure. Let's break down today's market drivers, the macro backdrop, index performance, and key earnings. The main reason behind today's sell-off was renewed US-China trade tension, followed by disappointing tech earnings. According to Reuters, the White House is considering new restrictions on Chinese exports that use US software, sparking concerns over supply chain disruptions and export policy uncertainty. Right after the news, risk appetite dropped sharply. Tech and semiconductor stocks led the decline. Adding to the tension, President Trump hinted that next week's meeting with President Xi might not happen, fueling more uncertainty. During the session, the Nasdaq fell as much as 1.93%, while the Russell 2000 tumbled 2.6%, making small caps the hardest hit group. Last night, Texas Instruments TXN reported weaker than expected earnings and Q4 guidance, triggering a sell-off across the semiconductor space. On semiconductor, AMD, Intel, Lam Research, Applied Materials, and KLA all dropped around 3%. The VanEck Semiconductor ETF, SMH, fell about 2%, reflecting broad-based pressure across the chip sector. Netflix plunged 10% after missing profit expectations and revealing a tax dispute in Brazil. Investors are increasingly worried that the growth momentum in tech may be losing steam. Market technicals. The S&P 500's 20-day moving average has flattened, signaling weakening short-term momentum. Although today's decline was driven largely by sentiment and policy uncertainty, US-China trade risk is unlikely to disappear soon. News will remain mixed, and market emotions will keep swinging between fear and optimism. This means more choppy trading ahead. In such an environment, high volatility stocks tend to experience deeper pullbacks. So, trimming positions and controlling exposure is a sensible defensive move. Holding some cash or rotating into defensive stocks can also help position for re-entry when clarity returns. Key stocks. AMD fell 3.28% but remains above its 10-day MA. No urgent need to sell, but if it closes below MA10, consider trimming 10% to 20%. Palantir is below its 20-day MA after a 130% YTD rally. Short-term trend is weakening. Consider taking 30% profits for risk control. NVIDIA trim 20% to lock in profits. If it breaks below MA50, cut another 10% to 20%. After hours earnings. Tesla reported Q3 2025 results after the close. Both revenue and EPS missed expectations. The main issue remains margin pressure caused by global price cuts to stimulate demand. Automotive gross margin, excluding regulatory credits, has continued to decline for several quarters. A key concern, given Tesla's high valuation. Management updated progress on Cybertruck production, but warned that mass production will be gradual, meaning limited short-term contribution. Given weaker revenue, margin compression, and cautious Q4 guidance, Tesla's stock slipped modestly in after-hours trading. IBM also released Q3 2025 earnings after the bell. Adjusted EPS, $2.65 beat. Revenue, $16.33 billion. Raised FY free cash flow guidance, $2 to $14 billion. At first glance, this was a strong report. Both top and bottom lines exceeded estimates, and higher cash flow guidance is a positive for long-term investors. However, IBM expects FY revenue growth above 5% at constant currency, implying slower growth in Q4 compared to Q3's to 7%. Software remains the core of IBM's transformation. While software revenue grew 10.5%, YoY to $7.21 billion, investors noted slower growth in key subsegments like Red Hat. This was a classic beat and raise, but guidance disappoint scenario. IBM shares slipped in after-hours trading. United Rentals. URI's Q3 report showed revenue beat expectations, though adjusted EPS came in slightly below consensus. Both total and rental revenue hit record Q3 highs, signaling solid demand in construction and industrial markets. However, net income fell about 1% YoY due to inflation and higher depreciation in specialty rentals, while EBITDA margin contracted 170 bits per second to 46%. Management raised FY total revenue guidance and reaffirmed EBITDA outlook overall optimistic. But investors focused more on margin pressure, sending the stock slightly lower after hours. VICR Corporation, VICR, a high-performance modular power conversion company, reported stellar Q3 2025 results. Revenue reached $110.4 million, easily beating estimates of $95 million, up 18.5% YoY. Diluted EPS $0.63 crushed consensus, just $0.12 to $0.14. This strength was driven by surging IP licensing income, including expanded agreements with existing partners. Management expects sustained growth in licensing over the next few years. Despite a weak broader market, VICR soared 30.33% today, peaking intraday plus 35%. This is a strong breakout. Wait for a pullback before entering gradually. Market outlook. Today's session was a classic sell first, ask later day. Both large caps and small caps fell sharply, showing that risk aversion is spreading across sectors. With the upcoming Fed meeting, renewed US-China tension, and a heavy earnings calendar for tech, investors are choosing safety for now. That's all for today's market wrap. If you found this video helpful, don't forget to like, subscribe, and share to support the channel. Thanks for watching. See you next time on US Stock GPS.